Newfound Gold has discovered what some are billing as potentially Canada's most significant discovery in the last decade. Hole NFGC01 revealed 19 meters at 93 grams per ton, starting at only 96 meters downhole. With over $70 million in working capital, Newfound Gold is well positioned for what the future brings. To learn more, find us online at newfoundgold.ca.
Welcome back to Palisade Radio. I'm your host, Tom Bodrovics, and joining me today is returning guest Dr. Quinton Hennigh. He's an exploration geologist with 36 years' experience in the mining industry. How are you today, Quinton?
Doing very well. Thanks, Tom.
I was wondering if we could start just by giving us an update on the loss of faith in the dollar. The last time we had you on was at the end of April, and there's been a lot of developments since then. So maybe give us your thoughts on what you've seen, obviously from your perspective, since then.
Yes, look, a lot of what I discussed back then has actually come to fruition. I mean, it's easy to see. If anything, that whole concept has become well crystallized over the past few months. You can see the dollar value relative to other currencies right now, for example, is very soft. And why? Well, people are looking at the United States and thinking, my gosh, this country is turning into a bit of a basket case right now. There's some issues around stimulus, obviously, that are triggering, we'll call it release of unnecessary monies into the economy. People see that and they think, oh gosh, this is going to lead to inflation. So it's easy to see from the outside, but then internally too. Look at inside of our country here. We've got, average Joe is starting to realize, wow, they can't hand out $600 a week checks on a routine basis for eternity without something bad happening. Okay, so I think, even your average person in this country feels a sense of trepidation at this point around what their currency is worth. They also have a sense of concern around the more emotional aspects, what's happening with social unrest and so forth. So yes, I'd say at this point, everything I discussed back in March or April when we talked last has come to fruition, and if anything, it's going to accelerate.
One of the other terms you were discussing on that last call was the emotional inflation. Where are we starting to see this creep in and push prices up?
I'm going to give you some direct examples, okay? Anybody that's gone out to buy meat at Sam's Club or whatever, Costco or whatever, recently has seen significant inflation. Part of it is a direct product of shutdown of meat processing temporarily here in this country, but a lot of it is driven simply by, we'll call it emotional inflation. Okay, so what do I mean by emotional inflation? Well, when they start to lose faith, like we just talked about, in the currency, there is a built-in sense that piece of paper that you have just doesn't mean as much as it used to. Okay, like a piece of paper, a dollar bill, a $10 bill, whatever, is just a piece of paper. Okay, if you're scared, if you're concerned about your future, that piece of paper depreciates. What does that mean? Translates to inflation, pure and simple. Okay, we've seen this in history, not necessarily here in the U.S., but you look back to Germany in late 1920s, the Weimar Republic. You can see what happened there. Okay, you can see it's happened in Argentina. Loss of faith. Is it directly? Can you quantify it? Like if you're an economist or something, can you quantify it? No, it's not. It's not something you can. It's actually driven by the social pressures and the personal pressures people feel within their household, within their budget, and so forth. So, we're entering a very dangerous time, in my view. It's very disturbing.
So, as we enter this dangerous time, as you're talking, what does that mean for gold, and how does this gold cycle relate to others from the past?
Well, okay, that's a good question. When have people in this country felt nervous about their economic future before? Well, probably in the mid-1970s. Mid-1970s were pretty wacky times. You were nearing the end of Vietnam. You had Watergate. You had uncertainty around the presidency. You had changeover to Ford, and then Ford was voted out, and then Carter came in. Like, it was very uncertain times. Not all that different from what we're talking about right now. So I would say that this gold cycle is more reflective of that one. It's more like the late 1970s than it is, say, the last gold cycle, which was from, say, 2004 through 2011. It wasn't necessarily driven by the same concern. I think we are starting to see true concern around inflation popping up. That has a profound effect on people. Then gold price, yes, obviously, has benefited. And we look at gold, it's nearly $2,000 here. But when you start to see the average Joe realize prices are going up, that's the emotional component that I just talked about. And it's starting to creep back in. It's creeping in a big way. I have discussions with people around me on a daily basis. It's definitely becoming a factor. So what does it mean for us? Well, I don't think the gold cycle this time is going to be like 2004 to 2011. I think it's going to be more like, say, 1978 through 1981. And I actually see the gold cycle in that period as being more productive for this industry than the one from 2004 to 2011. If you look at what happened 1978 to, say, 1980 when gold peaked, there was a huge run-up. Okay, a lot of people ran to gold, saw it as a safe haven, saw it as basically a way to hedge against uncertainty. All right, we're seeing that again. Well, what it did is it created a lasting period from, say, 1980 onwards even into the mid-1990s before gold kind of started to let down. There was a period there where gold prices held very tough. They held up around the, say, $400, $450 mark on average for about a decade and a half. And at that time, those prices were at a level at which gold mining was very profitable throughout most of that period. Yes, there were little dips here and there, but overall, from 1981 through, say, 1996, gold mining was a good business to be in. I think we're going to see that rebirth here. I think you're going to see gold take off where it lands. I don't know, maybe $3,000, maybe $5,000 an ounce in the next year or two. And then over the long haul, the next, say, decade and a half, I think we'll see sustained gold prices at a high level such that the whole industry really does benefit at a fundamental level. The prices we get for our product are going to be in excess of the cost, well in excess of the cost it takes to produce an ounce of gold. So it's going to be a good time. It's going to be a time for rebirth in the industry at all levels. Very optimistic. I think, you'll see that rebirth extend all the way from the mining side of the business all the way through exploration. So I really am very optimistic at this point.
Optimistic for the gold industry, obviously.
Correct. Yeah. Sorry.
Yeah, not a problem. So
yeah, sorry.
The key component there that you're pointing out seems to be inflation. As we came off the gold-backed dollar standard, we saw that inflation kick in. And obviously now we're with $4+ trillion of printing. The inflation is going to be a big component, right?
Absolutely. And that inflation, as long as the inflation in the gold price stays well ahead of the inflation, the cost associated with producing gold, then this is going to be a very good business. And what I'm trying to say is that from this point forward, this gold might spike in the next 2 years. Maybe it goes up to 5,000 and spikes. But over the long haul, the next decade or two, I think we'll see sustained gold prices well above the cost of production. In other words, there should be healthy margins built in to the gold price over the next couple of decades. And that's going to crystallize as a rebirth in the gold industry. Look at the 1980s. Look at how many gold companies were built during that time. And really Newmont came front and center at that point, but you also had deposits like Hemlo discoveries. You had other, we'll call it junior companies that became mid-tier gold producers very quickly. So I think there were a large number of gold companies formed during that critical time, 1980s. I think we're going to go into that phase again. You're going to see a whole new generation of gold producers pop up here over the next decade or so.
And just to kind of round out that idea, something we were speaking about before the call was the role of interest rates and cheap money to fuel that cycle. Share with us a little bit more about that thought.
Well, yeah, look, the last gold cycle, 2004 through 2011, was really defined by easy access to money, easy access to cheap money. What did the gold mining industry do? Rather than leverage gold prices like they probably should have and used more free cash flow to grow organically, they went after cheap money and they got themselves deep in debt. Look at Barrick, they were in terrible shape by 2011. Hopefully they don't do that this time. I mean, hopefully our industry is smartened up, okay? And I think you can see with this next gold boom, this one that we're starting, it's going to be more like the one started in the late 1970s. And you're going to see gold mining companies be able to grow organically through free cash flow. Yeah, hopefully they don't go back to the till and take out cheap debt, at least, not on an unsustainable level like they did. I mean, debt's always necessary at a certain level. When you just feed at the trough like they were, it leads to nothing good. So I think this next cycle, if we're smart and we don't, go overboard on the debt side, I think this is going to be a very different outcome.
So let's turn a little bit to, obviously, the geological side of your expertise. I was wondering if you could explain to us some of the types of deposits that get you excited when you start evaluating them. Obviously, you're really well known for looking over many different projects. So tell us a little bit about specific types of deposits that really get you excited about something.
Okay. Look, I focus on gold mainly. I also do some in silver. But I like world-class opportunities, hands down. Exactly what deposit type. I'm not necessarily focused on the particular geology of any given system, but there are certain types, obviously, that generate big deposits and are more desired than others. But I guess if I had to answer your question in the shortest way possible, but the most focused way, what attracts me are new discoveries. Okay, there's a lot of deposits we've poked holes at for years now, in some cases decades. And we know them. In other words, we've been there, done that. Okay, they're defined resources quite often. If we go back to just continuing to drill out these known deposits, we'll never grow as an industry. Okay, we have to find new deposits. It means we have to get smarter, but it also means we have to go to new areas or use new concepts, new geologic models that we have. Okay, so I like new discoveries, and I'd say that's where I put 99% of my effort. All right, so examples, Nova, what I'm doing in the Pilbara, very unique concept. Okay, we're chasing conglomerate gold in an area which really has minimal background with this style of mineralization. Yet we found extensive deposits, and we've got one here that's we've advanced to the point where it's ready for production. Okay, so that's a good example. We took something conceptual, grew it to something that will be producing gold bars soon. Okay, but there's others. Okay, I'm working with Irving in Japan. We're chasing epithermal veins there that are high grade. They're akin to the other famous gold deposits of Japan, which most people don't even know Japan mines gold. Okay, but Hishikari is there. What do? They use the vein material for smelter flex. What a wonderful idea. That means no capital for a mill. That means low cost production. Wonderful model for gold mining. Okay, so I love that. It's not only a new geographic location for the industry, but it's also a new concept for the industry. All right, so where else? Well, Fiji, Lion 1. The team there had drilled up about a 1 million ounce deposit. Interesting, high grade, make a pretty decent small mine. But let's take a look at this thing. Okay, this is a big system. It's an alkaline gold system. These things usually deliver 10 times what they have. Okay, where's the rest? So, thankfully, the team there at Lion 1 and I worked together. We came up with some ideas about drilling deeper, drilling targets underneath the lode systems to find high-grade feeder. And voila, we hit it last week. We hit 12.7 meters of 46 gram in a feeder. Okay, so new idea. Once again, let's go into an area and test something brand new. Let's not poke holes in between holes. Let's go after something new. White Rock Minerals in Alaska, they have a wonderful gold anomaly. It's defined by stream sediments, but now by soils. Huge system. They're going to start drilling there momentarily. SK Mining, I'm helping look at the entire volcanogenic massive sulfide belt south of SK Creek Mine. What are we doing? We're going back in and reinterpreting the geology there. And we're finding out that virtually everything we see in that whole property is VMS. And it's got gold, silver, rich VMS mineralization. All right, so we're talking about a new look in an old area, but it's turning up what are clearly going to be new discoveries. All right, I could go on and on. I mean, El Oro in Bolivia, huge potential for a major silver discovery, like hundreds of millions of ounces type silver discovery potential. Condor in Peru, Pucamayel. Condor has multiple properties that could be world class, but Pucamayel, I think, is one of the best high sulfidation systems I've ever seen. Completely undrilled, but it looks to me like a Parina type discovery. Parina was a deposit found in the mid-1990s and was sold to Barrick for $1 billion after 9 drill holes. Okay, It's incredible. But this Putumayo project has that kind of potential. There's lots of, look, I don't mean to exclude any of the companies I'm helping, and I could go on and on, but I like new stuff. I like new discoveries, particularly things that could be world-class systems. And I know a lot of people in the industry who, have junior companies who just simply need a hand to advance those. And this is a golden opportunity to do so. The market's back, the capital's coming into the exploration sector, and I'm able to help these folks basically do the work they need to make these discoveries.
So is the reason you like new greenfield exploration so much is because the potential that a project like that has to take it from completely unknown to something that could be a blockbuster?
It is. At a very fundamental level, yes. I like to see deposits or discoveries that are going to move the needle for this industry. This industry needs new discoveries, plain and simple. We've had a dearth of discovery for well over a decade now. And if we're going to go into this next phase where gold mining sees a rebirth, we got to make new discoveries, and it's got to start now. I think we're just on the cusp of it, so we're just at the beginning. But there's a lot of potential. People debate endlessly about what's the real potential left on this planet for more discoveries. I'm like, are you kidding me? There's all sorts of potential, okay? You just got to get a bit smarter and apply some more science and stuff that we've developed over the past few years. And you're going to be making discoveries left, right, and center. Okay, it's going to be a very, very good time coming up in the next decade or so.
I think one of the things that gets missed when thinking about this particular industry as a whole, obviously, is that the big players need to replace their ounces in the ground, their resource, and that's falling precipitously. But you can't get new projects online with no money for exploration, right?
And that's exactly right. And, the major miners, by and large, abdicated exploration to the junior sector back in the last gold cycle. That's continued. So, that was actually why I moved from working for Newmont to the junior sector, is because I thought, well, I could fight for a few dollars inside the Newmont to work on projects, or I can go out and, I could basically get access to money for multiple projects all at once in the junior space. So, I'm finding my particular lifestyle more able to do more of what I'm passionate about here. Okay, but in terms of the big miners, well, they're in a pickle now. If they want to grow, they got to find opportunities through acquisition. Well, that's a good ending for junior mining. Okay, now discoveries that are made. I mean, look at just pick Line 1 for example, since it's topical right now. How many times have you seen a 12.7 meter intercept of 46 grams? That could be a major feeder zone for a very large gold system. Well, you know what? I bet we hit the radar of every single major miner on the planet with that hole, okay? It's not hard for these guys to go, those guys have an alkaline system. Tick that box. It looks like they have found the feeder, tick that box. And we know that alkaline systems can deliver many millions of ounces. Well, tick that box. Guess what? We're on the short list. It's that simple. So, this is going to be a very good time. I can't emphasize enough that I am absolutely delighted at this point in time to be helping a number of companies that I think will have world-class discoveries that will all ultimately be highly desired by one or multiple producing companies.
So as we're talking about some of those companies and the high-grade deposits, Newfound Gold drilled one of the most spectacular holes. It was the highest grade hole drilled, I believe, in Canada last year, correct? So could you give us a bit of an update on that?
Certainly. Yeah, 19 meters of 93 grams per ton. Okay, it doesn't take too many seconds to realize, wow, that could be a discovery hole. Okay, so I remember first hearing about this early this year. I then had an opportunity to look at the drill hole in the project back in January. And hands down, to me, it looks very much like what I've seen in a few other cases. For example, at Fosterville in Australia. You look at Fosterville, it was a mine for many years. It produced gold at around 4.5 grams per ton on average. It was kind of a hand-to-mouth type of operation. They were doing incremental step-out drilling, hit high grade. And I got to look at that high grade very early on. I was actually advising Eric Sprott-Loosely at that time and went over to visit the mine. And as soon as I saw it, I thought, holy cow, these guys have found what we call an epizonal, high-grade zone within an epizonal lode system. All right. So, it jumped out at me as truly a unique opportunity. Like it was clear it was going to be big. Okay, the same thing occurred when I saw the first hole there at Newfound. Is the textures of the quartz, the ruggedness of the quartz, the nature of the gold in the mineralization, very fine-grained particles of gold scattered through the quartz. There's cryptic banding. Everything to me says that you're in the same environment that the high grade at Fosterville occurs. And based on that, it has very good potential for being a major discovery. That's why I was fairly aggressive around pursuing shareholding of Newfound through the share swap we did between Novo and Newfound back in, I think, March. I love discovery. And that one, that ticks all the boxes.
Excellent. One of the other questions I wanted to ask you is, how has technology changed in your time as a geo? Obviously, with 36 years experience, you've seen many things come and go. So let's just kind of go over some of the technologies that have really been game changers since you've been in the industry.
Yeah, certainly. Look, I'm going to talk about, there's been a lot, okay, and I don't have an hour to talk here, but I'll sum up in a few minutes some pretty profound advances we made on, I'll pick three, like the short list, all right? So the first one I would say is this. In exploration, one of the best techniques I've seen come to the forefront in recent time is doing what we call fine fraction stream sediment sampling. So when you take samples out of the stream, you take the finest fraction and you analyze that instead of analyzing, say, the sandier fractions or the more gravelly part of the stream sediment. Okay, why do you do that? Well, it gives you a better signal, a better response, we'll call it. Okay, and it really helps you discriminate where outcropping mineralization is. You can take one stream sediment sample that can represent several square kilometers of the area, like washing down into that stream. And you can say, yes, up that creek, there's a gold system or a copper. It doesn't have to be gold. It could be anything. Okay, but you can absolutely hands down say there's something sticking out of the ground within that basin that's worth chasing. Okay, what does that do for us? It saves a heck of a lot of time in exploration. Okay, think about it. We can cast a big net by doing these fine fraction sediments over an area, and we can readily pick where outcropping deposits are going to be within a broad area. You can do it in the entire country, for example, like in Africa. You can just blanket the country and then say, okay, there's something there, and then go in and focus on them. All right, that's astounding. Okay, so there's one advance. Second advance on the geophysical front, again, exploration. There's a technique called controlled source audiomagnetotellurics. Big mouthful of words. But CSAMT is turning out to be one of the most valuable geophysical techniques I've seen out of everything lately. I'm using it in a number of deposit styles. It basically highlights in the ground at a very detailed level where you have contrasts of resistive rock and conductive rocks. Okay, that sounds a bit esoteric, but because ore deposits, in particular gold deposits, are often accompanied by things like silica or pyrite or something, you can actually see these contrasts very well. I'm using it in Fiji for targeting this feeder system. I'm using it in Japan for targeting the vein system. You can use it in orogenic deposits for targeting lode deposits. You can use it in just about everything. You can use it in VMS exploration, like looking at doing massive sulfide exploration. You can see stratigraphic relationships and stuff that you could never see otherwise. Okay, so what does that mean? It means when you walk up to a target and put your drill hole on the ground, you have something very, very concrete to poke your drill hole at. That's very good, and it improves success. Okay, the third one, unrelated to exploration, I think it's a major advancement, and it's very recent, is mechanical sorting. Okay, mechanical sorting is coming to the forefront. Why? Well, they've got better sensors and stuff they build into these sorters, X-ray transmission, optical sensors, induction sensors, magnetic sensors, there's a whole list of them, okay? But they also see an increase in computing power. So computers and algorithms that they use to sort, identify a rock particle and flick it off at the end of the conveyor are improving. The speed of that is improving very dramatically lately here. So you can literally put a 3-meter conveyor belt through a machine, and the thing, all the rock particles coming off of it can be discriminated. You can pick out which ones have a commodity, like gold or copper or something in it. And then you can actually produce, say, a concentrate or winnow out waste material, or however you want to look at it. You're upgrading the material, okay? That's phenomenal because the cost around this is incredibly cheap. mechanical sorting costs, pennies or a few dollars versus traditional milling, which costs, usually tens of dollars per ton, right? So the cost benefits there are absolutely huge. And I think you'll see a continued improvement, continued utilization of mechanical sorting in the mining space over the next few years. And it's going to have a profound effect on how we produce metal and at what cost.
One of the things that strikes me as I'm speaking to you, Quinton, is how much experience you have all over the world looking at different projects. So how do you go about thinking about jurisdictional risk when you're evaluating a company?
I do have a fair bit of experience working in different parts of the earth. And what I do, it's very simple. I look at where you can build a mine, okay? Doesn't matter what you find in some countries. If you can't build a mine there, it's not worth spending money because you're not going to get any return on your investment. Okay, so, scratch off most of Central Asian republics or scratch off many countries in Africa, for example. They're not places that are friendly. You can't build a mine. You can't get return on your investment. So where do I go? I like first world countries that do have at least areas that are favorable for mining. So Australia, of course, Western Australia in particular, many parts of Canada, here in the U.S., Nevada, Alaska, certainly. But does it exclude everyone? No, there's other places where things are changing dramatically. Okay, look, Peru is a great place to go mining. It always has been, at least for the past 30 years. But places like Bolivia improved dramatically here lately, okay? Morales has gone, you're seeing a whole ground shift in sentiment, changing sentiment towards mining. This is a wonderful thing. Okay, finally we're starting to see some countries that are opening up and becoming better places to operate. Ecuador went through this recently. Ecuador, like 20 years ago, I was there with Newcrest, and we found a big honking porphyry deposit down there in the southern part, and we couldn't do anything with it. I mean, it was like just a nightmare. Like we found this discovery and did nothing, right? It was a waste of money. Well, today you can. I mean, look at Fruta del Norte. It was a challenge at first. It was a great discovery, but boy, trying to move that sucker along, it was a problem. But now look at it. It's producing. Lundins are doing great. It's a fantastic mine. Yields a lot of value for a lot of people. Look at the, like SolGold's porphyry. That's yielded a lot of value. Ecuador is open. It's open for business now. That's a good thing. You have to look at it country by country. But the fundamental question is, if you invest money in there, is it safe? Are you going to see return on your investment? That's what I look at.
Perfect. As we wrap up here, I know we were speaking before the call about the book, The Fourth Turning, and how it gives us an interesting perspective into viewing the signs of the times, let's say. Are there any other books that you could recommend that come to mind?
Oh, well, Black Swan. I mean, obviously. I mean, we're kind of living it. Look, I would say those two first and foremost. I mean, The Fourth Turning, again, we're kind of living it at this point. We're at that critical juncture where basically 80 years or so past the previous round shift that this nation faced, which was the onset of the Second World War. This time it's different. It's, more internal issues like we saw, say, in the late 1850s and early 1860s. It's scary times, but if people read these kind of books and get that perspective, it becomes less scary. What cures fear? What cures fear is smarts, okay? If you can understand something and kind of rationalize it, a lot of the just raw emotional side of our brain or part of our brain can be beaten back and we can be civilized, okay? I think those listening to this will benefit from reading those books because this is an extraordinary time to position yourself to get exposure to potential wealth. Look at the gold space. My gosh, what an opportunity. I'm glad I got to see another round of this in my lifetime. But this is akin to, say, 1977, 1978, somewhere in there, where you can just about feel it coming. Okay, we are on the cusp of something big. People listening to this, I think most people understand what I'm saying, that, wow, you have a wonderful opportunity here. And if you have a really good understanding or background in society and human nature and why this stuff happens, you can act on it. You can be rational. You can rationalize the storm and take advantage of it.
Understand things from more of a 5,000-foot view instead of just reacting to things, right?
Yeah, absolutely. Absolutely, yeah.
Excellent, Quinton. Well, we really appreciate your time today and look forward to having you back at some point.
Anytime. Thank you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?